Lakshmikumaran, founder and managing partner of Lakshmikumaran Srisaran, for a keynote on bracing GST for the digital economy. Mr. Lakshmikumaran is a renowned tax law expert who has handled several high-profile litigations and has led his firm in representing clients in over 40,000 litigations before Supreme Court of India, High Court and tribunals for over 30 years. He is a former IRS officer and a prolific writer and most sought-after speaker, advisor, consultant on various tax topics. As a delegate of the International Chamber of Commerce, Sir has attended the World Custom Organization Committee meetings and has also addressed the WCO valuation workshops as well. Sir.
Good evening to all of you. I am told I am the last speaker. The subject given to me is interesting. Bracing GST for digital economy. In other words, digital economy exists, it flourishes, it moves faster than our imagination. There is a law called GST, which is more or less static, excepting some amendment being made by the GST Council here, there, etc. How do you make these GST laws to apply to ever-changing digital economy? This is a challenge, and this is what we are supposed to talk. I have about 30 minutes now, sir. What is the time you want me? Around 30 minutes. Normally lawyers do not know when to stop, so but somewhere somebody should raise their hand and then I will stop. What I propose to do is not only about the GST as a law, trying to grapple with the fast-moving digital economy or fast-developing digital economy, but there are other tax laws also which are struggling, which are trying to find how to tax this particular digital economy. That will be income tax. There's also customs. Though I am supposed to talk only about the GST and digital economy, I take the liberty in covering other subjects as well. Maybe you can accuse me I am going out of syllabus, but I suppose it is a context why I want to cover other aspects also. Then you can see the big picture rather than only a small picture. If you approve, then we proceed like this. We will talk about the digital economy as such, and what is digitization of business and taxation challenges. As far as the GST is concerned, we will cover the cross-border transactions of the digital economy, as also the domestic digital economy as such. How these two are getting taxed under the GST as of now, and what challenges the GST is facing in taxing these scenarios efficiently. We will also talk about what could be the way forward as far as this so-called the GST bracing with or struggling with digital economy. If you look at the UNCTAD report, the e-commerce revenue as of 2019, we are 3 years behind or ahead, was about 26.7 trillion in the year 2019. I am sure today it will be much, much more, especially this one economy grew exponentially during COVID period. While the physical economy was having struggles, digital economy bloomed. Digital products as e-commerce where the goods and services are delivered electronically. I deliberately use the word goods and services delivered electronically. Somebody may ask, how can you deliver goods electronically? We will now see that. If you look at the global GDP, the digital economy contributes more than 15.5% of the total global GDP, growing more than 2.5 times faster than the global GDP in the last 15 years. And who are the leading players? Of course, the United States, China, and European Union are the major players, are the content creators, who are the people who actually play the game, and the rest of the countries are receiving the effects of the digital economy, and ultimately money flows from these countries to these countries through the digital economy as the concept. Just to give a background, or at least recapitulate, what are the digital products and players? If you look at digital content such as movies, music, podcasts, etc., you will find Prime Videos of Amazon, Netflix, Spotify, and whole lot of Ghana, blah blah, all those things. And each of them, they collect a subscription or on a pay basis for the products delivered. I am talking products now. Netflix is delivering a movie. In the olden days, we used to have the movies seen in the theaters with the film which is being operated through the cinema arc carbon projectors. They're all gone. Then came your DVDs, in which the movies were recorded and it was played. That is gone. Today you have jukeboxes where you can ask, and from the cloud it can be delivered. So therefore there is no question of any medium in which a particular movie or a song is recorded and delivered. Without the medium in which it is recorded, it could be delivered. And these are the things which we are now talking about. When it comes to the question of digital services, you must be seeing ad nauseum the advertisement of Baiju. They are one of the leaders of teaching. In fact, I must tell you, education is a big business. Very big business. Some of you are already here in the business. A byproduct of the education is publishing. A byproduct. And there again I am seeing many people here. And the further byproduct is various software. Just now we talked about the Taxo. Is again a byproduct of this. And these are all basically digital services. Telemedicine, for example. You never heard of it in the past. You could do that. Online learning. People sitting in here can teach in people in the US. So they are all digital services delivered. Then you have cloud computing. The cloud computing, data trading, etc., of Amazon's, Azure, of Microsoft, a lot of people have this. And this is again for storage of your information there and retrieving from there. You pay a subscription for this. That amount is significantly more. For the investment made and revenues collected, there is disproportionately more. Then you have several services like payment processings. Google Pay, Paytm, Amazon Pay, blah blah blah, RuPay, all those things are digital payments. You don't have to go to the bank. I do not know when any one of you went to your bank last time. Years ago, at least I can say a decade ago. You don't have to. All you need is a plastic card. Earlier we used to insert and take, even that is not necessary. Touch and go. In fact, they call touch and go actually. And that is possible today. Payments, bank accounts transferred. And you don't have to go to a bank. If you are a big business, banker will come to you. That is also not necessary now. Social media, Facebook, Twitter, all these are digital economy. Softwares, telecom software, Microsoft software, iOS, all these things are basically software products delivered digitally. And you can multiply these types of digital products and services delivered through electronic medium. I am not here to classify these items, that is, number is more. My purpose is to how the law of taxation law deal with this economy. That's what I am supposed to deal with you. So I'm just giving a snapshot of what's happening in the digital economy space. Then we talk about how the laws are treating these economies and how do we tax. All of us know when there is a physical movement of goods, there is a tangible object. You can touch and feel, not touch and go. And therefore it is possible to determine when the product is moving out of the factory or my warehouse or my shop. But these services and digital products evade your eyes, evade your ears, evade your hands, evade your watch. But it happens. Now, if you look at the size of the companies operating this digital economy, giant is a small word for these companies. Because giant business, big business is no longer a word. Giant business is no longer a word. I do not know we can call monster. I do not know, I will be offending somebody. But it is more than that. That's exactly the company size of this. We used to have British Petroleum as one of the largest company having so much of assets, blah, blah, blah. We have not heard of them for some time. They are, of course, there. We only talk about today Amazon or this, Microsoft, who is the smallest, etc., etc. This advent of the digital economy and exploding the growth here, what does the taxman do? These operations can grow cross-border or domestic within countries. I do not know how many of you are aware, under the GATS, there are 4 modes by which the services can be delivered across the borders. But in 2 countries, they are called Mode 1, Mode 2, Mode 3, Mode 4. Mode 1 is a situation where the persons do not move, the services move. Like for example, if there is a client in Netherlands asking opinion from me, I am sitting here, I give an opinion, I send it across electronically, he gets it, I am not moved, he has not moved, he makes the payment to me in dollars, fine. So this is actually electronically transferred. Same thing in the Microsoft software or your digital Netflix, all those things are, they don't have to move from existing place to you to deliver service. It is called Mode 1. Mode 2 is a situation where you go to a country, avail the services and come back. For example, if you want to tour, say Paris, you go there from here to France and then somebody takes care of you there and then come back. Therefore, you have gone there physically, avail the services and came back. It is again called Mode 2. Mode 3 is the physical presence. Somebody in TCS here, he establishes a subsidiary or a branch office in US and delivers services from there. Therefore, he is physically present. Not temporarily, he is physically present. That's called mode 3. Mode 4 is the movement of natural persons. As a lawyer, I go, deliver services and come back. A paralegal or a paramedical can go, a doctor can go, render services and come back. So it's called mode 4. And this service is what we are now talking about. Products, digital economy operates in all the 4. And even to cover the mode 1 is a Herculean problem. As of now, as we are talking, India is negotiating free trade agreements with a number of countries. We already concluded in Australia. Negotiations are going on in UK, European Union, Canada and Israel. GCC countries also will come in. But these free trade agreements are different from what you have seen in the past. It is not about reduction of the custom duties on the products, etc. They are talking about movement natural persons. They are talking about services, market access, financial services, IPRs, labor, environment issues. And it is a total package. It is like a mini WTO you are negotiating. When we are going to get these types of negotiations in the free trade agreements, they are not talking only about mode 1, mode 2, mode 3, they are talking about all the modes. Today, as I am talking to you today, we are talking only in terms of this operation of cross border without the movement of persons. Mode 1 itself, what problem it can create. Mode 2, mode 3 is very far away. You also see digital platform exists, social media platforms. They don't even come here. You go there digitally and then put your footprint and come back and somebody else sees, etc. The whole thing goes on. So therefore, when you are talking about the services, various types of services are being delivered. For example, teaching, Byju's is a service. On the contrary, you are also seeing various products. A movie, an e-book is a product. It's delivered digitally to you. So the question therefore is, just because a product is digitized and delivered to you through electronic medium, can the customs say, I want to collect the custom duties because it is a cross border? What can income tax will do? What can GST officer will do? What these 3 laws say and how operate, I am talking only about the mode 1. I am not talking about other things. If I can do justice to mode 1, that is without movement of persons, only the services or the products transfer or move across, what are the laws which are operating is the question. If you look at, I am now going to cover customs, income tax and the GST. I hope who the organizer, they don't mind if I cover more subject than what I am asked to do. I hope you don't mind, right? Let's now talk about what is the right of countries to tax. Whenever there are cross-border transactions and the cross-border transactions involve taxation, which country has the right to collect the tax, levy the tax? Otherwise, there will be anarchy totally. Remember, in the olden days, sales tax was there before the amendment, where a sale is taking place from, say, Tamil Nadu to a person in Bihar. Is the interstate sale. Sale is originating from India, from Tamil Nadu. Tamil Nadu collected the tax. Bihar said, ultimately goods are delivered here, therefore I will collect the tax. Andhra Pradesh said, through me the goods are moving, therefore I will collect the tax. This happened within India, in our own eyes. Many of you might not have been aware because many of them are not born, they are so young. So you may not know this actually happened. If that can happen within a country, within the different states, just imagine about 190, 200 countries across which the goods and services are moving electronically. How do you collect the tax? Who has the right to collect the tax? Custom duty on goods is collected by the country where the imports are taking place. Exporting country do not, excepting where they can charge export duties. Otherwise, they don't have the power. The power to collect import duties are the import country. So that is at least settled. Now, with regard to the GST, your law says it extends the whole of India. Correct? If a person was delivering services, say from US, Seattle, to a person in India, and if the law says we must collect the tax from the person in Seattle, can the Indian tax law extend and collect the tax from him? Is a bigger question. They called extraterritorial jurisdiction. Whether India has or not, the Constitution of India allows it, Supreme Court also blessed it. But how to collect is a different point, we will come back now. I am now going to divide the entire subject into services and goods, digitally delivered. Unfortunately or fortunately, I do not know, time will tell. As far as the GST law is concerned, it defined goods. Anything other than goods is services. That good delivered electronically is goods or not, the GST law does not talk about it. It treats, if the physical movement of goods, it is goods. Other than this, everything is services. Therefore, digitally products, digital services, both are deemed as services as of today. Then what happens? The countries have to sit down and decide who has the right to collect the tax. The first question came before Ottawa Taxation Framework Principle 1998. There it said, taxation to digital products provided from abroad to consumers, that is B2C. And now B2B is fairly simple. If somebody from US is delivering a service or a product to a person in business here, like an import of goods, import of services, businessman will ask to pay reverse charge, no difficulty. But when you are importing it digitally, the government to come and collect tax from you by millions of people, the cost of collection will be more than the actual taxes. Therefore, it is not feasible, and compliance will be the worst thing. And therefore, the only way is whether you can tax the person who is originating from somewhere. And then the question comes in whether India has the jurisdiction to collect the tax or not. See, if whatever I am saying, if it is too high, you tell me, I will make it coming down. But the subject is such that you need to necessarily imagine many things because we are dealing everything electronically. I suppose I can't be found fault for subject matter given to me is this. The major problem is going to be this. We are talking about level playing field. What is the level playing field? Every time we hear this, every time. Let's take the case of goods. If a motor car is imported into India and the custom duty is not charged, what it really means? It means the goods, cars will come at the CIF price. It will pay the local GST like a local car manufacturer, Maruti or Volvo or Hyundai, Honda, etc. But the economies of scale, the cost of electricity, etc., in different countries may be much lower, and therefore the product can come at a price which is much lower than the product costs of production in India because of infrastructure costs, electricity costs, fuel costs, so many things, hidden costs, which are not given as a credit at all under the GST law. So therefore, there is every possibility that the domestic production cost will be much more than the imported goods CIF price. Therefore, the government steps in and then levies a custom duty on the imported goods, say 50%, 100% as the case may be, depending upon the commodities in question, and say this duty you pay and that is not available as a VAT. So that exactly is the protection given to the domestic industry against the unfair prices at which the goods are coming in. I am not talking about anti-dumping duties and others, it is a separate class by itself. That this particular levy which has been imposed as a custom duty on the imported goods provides the level playing field for the domestic manufacturers here who are otherwise suffering from other added costs. This is the protection. In fact, most of the countries, custom duties are treated as most of the protection rather than a revenue. But as far as India is concerned, it is doing both. Or the revenue more and protection is less in the table. Now, the principle which we were following in the VAT regime or excise regime is what? The right of the state from where the goods originate is where the taxing. If Maharashtra salesman was selling to a person in Karnataka, Maharashtra will collect the tax as an interstate sale. And Karnataka cannot take the credit. So it goes as a cost. So we had what is known as origin based taxes. Then came the GST, which is called destination based. The concept of destination based came from the Ottawa concept, where they said that you must go for what is known as a destination based taxation. If you go destination based taxation, import duties are destination based tax. GST is a destination based tax. Your service tax, a destination based tax. So therefore, the destination country will collect the tax and retain it. So the right of the state which collect the tax is determined by the process of whether it is a destination country or originating country. But the life is not that simple. It is not at all simple. There were many questions where it originates, where it destination. Destination itself can be a question mark. It is like yogis. Yogis do the prayer daily, yoga, meditation, etc. on the hope one day they will have a conversation with the God. It may not happen. They are in the journey. They don't know the destination, they are in the journey. And some people like the journey. Like I enjoy the journey of my work. I do not know what is my destination, but I enjoy every day my work. This is exactly what is happening here. So now if custom duties are not imposed on the digitally imported products or digitally imported services, and if they are asked to pay import service or GST, if they are only paying that, if that is available as a credit, effectively it means that the digitally delivered products are coming into the country free of custom duties. Therefore, the domestic players similarly produce services, etc. They have to compete with the international people with all their negatives. It is like asking them to run a 100 meters race with a 2 steel ball tied to them. They must win the race. It's not difficult. So therefore, charging of a tax which is non-vatable on the imported goods and services electronically delivered provides what is known as a level playing field as far as the domestic producers are concerned, similar services and goods. If ultimately B2C transactions do take place from abroad to India and Indian consumers can't be taxed because of the wide number of people, can the tax be collected from the source by India? The answer is yes. The countries have agreed, yes, it is possible. It is very difficult to comply because if you should summon to a person in Seattle, will say, thank you very much, I will not come. And even a phone call made from here, etc., I can say, you are disturbing me. Because he is in that particular country. So therefore, the tax officers have been, I won't say troubling you, dealing with you in a very nice manner, within quotes. And they can't do that way when it comes to question of foreign nationals, especially living outside. So therefore, there is a compliance problem, and then ensuring that all the people pay their taxes correctly. If you look at the VAT or GST on digital services across the globe, we have just made a map. These are the countries which have adopted the system of GST or a VAT, whatever name you want to call, for digital services delivered across or cross border. These are the countries which ultimately have adopted this system of taxing the cross border services. Now comes the direct tax. In the case of direct tax, what is the concept? Same, a person in abroad is delivering a movie or ebook or something to a person, he is delivered and he is, by click of a button, this person has imported it and is enjoying it. By this particular process, there is an income arising in that particular country. So the income arrived there must be taxed in that particular country. So the US will tax the person who is delivering these services because he is getting the revenue there. I suppose India will also do that. But Indian taxman says, hey, hold on. No doubt, the money is going there, but money is going from here. Indian economy, Indian consumers are making the payment from here, and they are not present here. If they are present here as the PE, I would have taxed him. He is not a PE. He is not having anything here. So I am not able to tax the source country and the origin country. Now here, as far as India and other developing countries are concerned, from this economy money is going out, I am not able to collect the tax, therefore I should also have the right to tax. That is where the problem came in the OECD guidelines, etc. You will have what is BEPS action plan, etc., all those things came. So this gave rise to what is known as levying, what is known as equalization levy, which have been levied by India, the first person to do so, while other countries were still contemplating. India went ahead and did it. This levy is being made and it is not available as a credit in the other country. So it is a tax collected here. Now under pillar 1 they are trying to dilute this particular thing, etc. I am not here to discuss, but kindly see that digital transaction across the border is getting taxed under the income tax from a source state, from the income is coming from this country, therefore India must also have a right to collect the tax. That is what the principle is here. So therefore, which country had the right to collect the tax? Originally was a country where the revenues are coming in. That concept is slowly changing. Apart from that country, the source country can also tax. Therefore, the right of collecting the tax is also now being between shared. How to collect, how to apportion, etc. is a question of methodologies. But I am talking about the concept of right to tax. Now come the customs. Customs, originally, US proposed in the WTO way back in 1998 that if any product is delivered electronically through the electronic transmission through the wire or wireless, you should not levy custom duty. A proposal was moved and it was accepted by all the countries including India. A declaration was made by WTO chairman that all the countries will continue not to collect the custom duty on the digital transmission of goods or services, what the case may be. Now the question here is, every 2 years or 4 years, it is extended. The moratorium of not levying the tax is getting extended, and it come up for the discussion today, this year in the Ministerial Conference 12 held in Geneva. I was also invited to assist the government, and I was there. A major discussion took place as to whether India can oppose the moratorium and can they charge the custom duty on the digitally delivered services or goods. In the ministerial conference, lot of discussion took place with regard to the extent of the moratorium, and it was extended with a lot of difficulties till March 2024 or earlier, whichever is there. What exactly is the case of the government, India? The UNCTAD report, World Bank report, etc., they say developing countries lose to the tune of more than $12 billion as taxes. And India is a major contributor. So what they did was, at least what they are having in mind is, let us talk about digitally delivered products, digitally delivered services. Digitally delivered products, even though it does not cross through the customs borders, can the custom duty can be levied or not is the question. And that the government says we must have the right to collect the tax. Of course, there was a lot of opposition. Ultimately, by consensus, it has been extended for 2 more years. But sooner or later, the tax will come. But Indonesia did a smart thing. Indonesia, also member of the WTO, way back in 2018, they said, I am interpreting the moratorium. They said, what they said was, electronic transmission is not taxable, custom duties. I agree. Therefore, if you get an email in which an attachment of a movie or an e-book came, they said transmission is regarding the email. I will not tax. But the contents contained in the email, namely the e-book, I will tax. And they created a separate entry called Entry Chapter 99, and they taxed as custom duties these products: sound recordings, audio visuals, video games, computer software, literary works, etc., etc. And they interpreted the moratorium declaration itself. India was not that bold to go and do it. They were saying that no, we will get the moratorium cancelled or revoked, then we will tax the collection. So therefore, there is a lot of discussion taking place in the international arena about how to tax these digitally delivered products. Unfortunately, in India, all this is deemed as a service under the GST. So now, if India has to tax this as a custom duty, you have to do a whole lot of amendments to the Customs Act, custom tariff, and the GST law, IGST. All those things have to be properly amended. Normally, whenever you are going to the custom duty, concept-wise, the goods should come into the custom port, it will be bonded, or bill of entry will be filed, officer will assess it, or you are in self-assessment, out of charge given, goods move after payment of custom duty. Therefore, there is a custom border, the goods go through that. In the digital thing, custom border exists, the product do not go, it jumps over. If it jumps over, most of the provisions of the Customs Act will not apply. Existing law. And you have a judgment of the Supreme Court which says if there is no procedure to collect the tax, tax is bad. Levy is bad in India if there is no procedure to collect. So therefore, you have a problem, seniority case, etc., etc., you have a problem unless you amend the law to amend the customs law, various provisions, and the custom tariff, and the GST law properly. You will have a problem. Custom officer will have a problem in collecting the tax, even they want to collect custom duty. There is a big problem there. But I suppose, like innovators elsewhere, I think tax department also got a lot of innovators. So they come with a lot of innovative ideas, and they can amend the law in a manner where it can be collected as custom duty. There are several ways in which you can collect. I don't want to tell you all those things, etc. With a separate session by itself. Should I stop now, sir? I'm already 5 o'clock over. Am I to stop now? I have not come to the main subject. Look at the lawyer. He has not come to the mains of GST. He has been doing all around, etc., excepting the GST portion. So, Mesh, if you want me to stop, I'll stop. What do you say? Pardon? No. This is the main dish has come now. The only salads we have done. So therefore, how the digital economy will be tax and the custom duty purposes is a controversy which people have to necessarily deal with it. As I told you, it requires tremendous amount of legislative changes. This I have already dealt with, don't worry. Now comes the GST. Now, in the GST portion, we will divide into two portions. One portion cross border, other one is domestic. All of you think, domestic is no problem, sir, let us talk about the cross border only. Domestic also its own problem, I will come back later. As far as the GST cross border is concerned, so the services are delivered outside, from outside. An Indian importer, within quotes, you and me, I am talking about, we access that information. Let us take the case of a movie which you want to play. And you say, Alexa, play me this movie. You got digital, it connects it to your TV, you play along with your children and wife and kids, you enjoy the movie. So, you don't even realize how the movie came. Only said, Alexa, you wake up, she wakes up. You say, I wanted this particular movie to be played, and then it plays. What really happens? When I told Alexa, wake up, she was already listening to you, but she was not responding. Now she said, wakes up, she wakes up. And whatever digital, analog voice which you said is converted to digital. The digital signals are sent a microwave to the cloud. In the cloud there is a jukebox, and she picks it up from there, electronically transmit back again, and then converts the digital into the analog, and then conveys it to your TV, and TV you are seeing the movie. It all happened in fraction of a nanosecond. And at the speed it goes and comes back. And it's live streaming taking place. It is not as though that is delivered, stored in your device. Nothing is stored in the device here. It is transmission taking place live from there. So you have imported a movie. Under the custom law, you must pay the custom duty if the law is amended. I wish you best of luck, all of you. How many of you will surrender your TVs? And that's because paying custom duty is not easy, sir. I am dealing with the custom officers. It's not easy. So if you have to pay the custom duty, it is going to be a tough thing. Therefore, the government has to find a method by which the exporter can be paying custom duty here. We will see that, how to do it separately. Now coming to the GST portion, as I told you, they didn't distinguish between the goods and service being delivered here. Therefore deemed as a service, therefore you will have to pay the tax. If this is importing taking place by business to business transactions, no problem. Importer will pay the custom, he will take registration and pay and reverse charge. What happened when it is delivered to the individual customers? As I said, one of the canons of taxation is convenience of collection. How do you conveniently collect the tax? Is it possible to collect from 10,000 or 10 million people here? Ask them to follow this, etc. The department might have more than 10 times that number of taxmen to collect from you. So that salary paid will be more than your taxes paid. Therefore, that will be uneconomical. So therefore, the question is whether India can ask that operator, say Netflix or Alexa, who doesn't have any presence in India, he is sitting in Seattle, Redmond, and whether he will be asked to pay the GST in India. And there the law says, whose delivery is mediated by the information technology over the internet or electronic network, and the nature of which renders the supply essentially automated, involving minimal human intervention and impossible to ensure in the absence of information technology. If these conditions are satisfied, then Indian tax authority has a right to collect the tax from the person abroad who has delivered the services here to the individuals here. And I must tell you, when Indian government appetite to collect the taxes on this digital transaction is getting more and more, the one community which will be extremely happy is the lawyers community, is the lawyers' delight. Each one of the word here, the nature of which is supply essentially automated and involving minimal human intervention. Therefore, human intervention is contemplated, it will be minimum. What should be minimum for each particular case? Case to case basis. Because there is no law you can do so. Because they also tried. The legislation tried to put some standards, etc. They failed. Ultimately, they said minimum human intervention. If that is minimum human intervention, then you have to pay the tax. Intervention is more than minimum, then other person is not liable to tax. So therefore, as far as our office is concerned, we get work almost every week now, Anshul. Some person from, and there is a directorate in Bangalore, so they do all the search. Who are all the people who are delivering services of this nature? And they issue notice to them. Hey, Mr. So-and-so, we see from your this thing, etc., you are delivering the services to various people, etc. From our record, we have not taken registration, why don't you pay the tax? And last 4 years, 5 years, you have not paid, blah, blah, blah. So that fellow gets a mail like this, etc. He says, no, from various come. So his mail is not for me, divert to somebody, etc., forwarded to somebody. Ultimately, it lands on the CFO or the taxman, etc., something related to tax. So he says, what is this letter from somebody that I am delivering here, I must pay the tax, etc., what is it? And he rings up his counterpart and somebody else. Hey, have you received? I also got love letter. So what you do, I went to a lawyer there, and then he tried to give what is the interpretation, minimal, maximal, etc., etc. So who is that advocate, etc. So therefore, this fellow is sitting here, somebody in Bangalore department instigates, and this fellow is getting work, and he is studying what exactly is the minimal intervention, maximum intervention, essentially automatic, not automatic, etc. So therefore, one community which is, one tribe, which is very, very happy with regard to this type of thing is the lawyers community. And it is necessary because ultimately we are interpreting law. Ultimately it is rule of law. So therefore, what is the law involved, etc., is to be distributed. Now, let us now look at the scope of those services which are coming in digitally. Advertising on the internet, providing cloud services, provision of e-books, movie, music, software and others intangible through telecommunication network, providing data or information retrievable or otherwise to any person in electronic form through a computer network, online supplies of digital content, that is movies, television shows, music and the like, digital data storage, online gaming. These are examples, they are not exhaustive. And imagine this particular market, the players are many, users are many, and since the users are consumers, not the business communities, and therefore the taxman tries to collect the taxes from outside. And this is provided under the OECD, therefore India is not doing something wrong. But interpretation wise and then compliance wise, getting them to comply with your law is a major challenge as far as any country is concerned. So I was telling you B2B supplies, no problem, B2C supplies the problem. And they say we have applied simplified return. You can take it from me, if whenever government says I can simplify return, assume it is most complicated. You take it from me. It is never simple. And because by nature, our taxman thinks of various other possibilities. What will happen in future? So to provide various contingencies, the number becomes bigger and it is called simplified. As far as the domestic is concerned, then you should say, sir, there is no problem here. And the problem here also. Let us take the case of your Uber. You as a person want to go to the airport from home, you say, go to Uber app and say, I want to go to terminal 2, terminal 3, whatever, etc. And he comes within 5 minutes or so. You have already got an app. And sorry, he is coming to stop me. Huh? I'm just finishing. Huh? Don't worry. I know he's a reminder to me. Huh? So the taxi comes. How did it come? You sent a message from here. It went to the app. App automatically transmitted to the drivers in and around that area, who all got their app reflections. And that fellow says, yes, I am ready to do The minute he does, etc., immediately in your things, yes, so and so, taxi number, blah, blah, etc., it comes. And he'll say 3 minutes away, 2 minutes away, etc., he comes back. You sit, you go, terminal 3, over, then money is already debited in your account, you get over, thank you very much, etc. Really what happens? The number of users of taxi are in millions. The number of taxis, service providers, also in millions. And you are not able to connect with them. Because of the internet, you are having a platform where many can connect with many. That's the whole idea of this. Now, who is the service provider actually? The taxi fellow. Who is the service receiver? You are the taxi receiver. And therefore, who should pay the tax? Service supplier must pay. Taxi fellow should pay. Taxi fellows are many. The government says, why should I go after everybody? Somebody will be enjoying exemption, blah, 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 etc. Why not collect from Uber itself? So therefore, they will create a deeming fiction by saying that intermediary, the platform through which this transaction takes place, even though he is not the supplier, he is merely a provider of a platform. But since the service is delivered through this particular platform, we will deem this person as a taxi person and we will ask him to pay the tax as if he is a taxi person. And that's the law which enables the government to deem a person who is not providing a service as a provider of service. Like for example, sir, I am a lawyer, I am rendering service to you, I hope so, and I must pay the tax. A chartered accountant pays the tax, an architect pays the tax, a cost accountant pays the tax, company secretary pays the tax, lawyer must also pay. No. It's a lawyer, the customer or the client, he will pay the tax on reverse charge. Don't ask me why, etc., etc. I don't know whether lawyers did the lobbying, etc., etc., not know. But the fact of the matter is not. And many lawyers think they are very good, no? Because they don't have to comply with the law, taxpayers, etc., etc. But they don't understand how much they lose out on the input tax credit. They are not getting the credit. Therefore, the cost becomes higher because of this breaking of the chain. But in any case, there is a larger issue. This is not the forum where we have to discuss this. Problem, what I am trying to say is, where the government sees an opportunity, instead of collecting from many, they will deem somebody else to be the actual provider of services and ask them to pay the tax, etc., under the garb of convenience of collection. Adam Smith's original principle of economics on taxation, he says, convenience of collection, here, let's collect the tax. I think I am done with this. This is all. Way forward, I can say, I do not know. As far as the customs, how will they do it? I do not know. Income tax pillar 1 will come, and then what will happen? I do not know. Whether India will be able to collect the taxes from the foreign entities for the delivery of the services and goods in India efficiently, correctly, and then without any fail, I do not know. So, after so many minutes, how many minutes, sir? 40-45 minutes of my talk, way forward, I would say, I do not know how it goes on. But in whatever way it proceeds, we will be happy as lawyers. Thank you very much, all of you.